Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Wednesday, February 4th, 2009. We begin in the UK, where consumer confidence, as measured by Nationwide, fell further in January, ticking down to 40 from 48 in December. Consumers remain concerned about the economic downturn and the situation in the labor market. Both the present and future expectation subgauges declined. In a second release from the UK, activity in the services sector contracted yet again, but the pace of contraction eased as the Services PMI indicator rose to 42.5 from December's 40.2. That figure surprised forecasts on the upside and gave the pound strength today. The Eurozone final version of its Services PMI came in at 42.2, which was slightly below its preliminary release. The euro-pound pair fell 200 pips in favor of the pound today, following the better-than-expected UK services data. That's a sharp counter-rally to what we saw on Monday, following yesterday's ranging conditions. Tomorrow, we have both the Bank of England and the European Central Bank deciding on interest rates, with the Bank of England expected to cut by 50 basis points, while the ECB is expected to hold. The pound also shot up against the Swiss franc, rallying more than 400 pips from its low near 1.6410 to set a high near Monday's resistance of 1.6850. Shares in London were up today, helping to boost risk appetite during the European session for the pound. The pound-dollar pair rose higher today as well, though not with the same volatility seen in the previously two mentioned pairs. The pound broke above resistance from Friday's high near 1.45 and set a high for the session at 1.4577 in the New York session, following better-than-expected services data news from the US, which we'll get to later. Eurozone retail sales were flat on the month in December, which was slightly better than forecast, though lower than November's 0.6% gain. On the year, however, sales fell 1.6%, which undershot forecasts. The data comes in the wake of weaker than expected German retail sales, so the picture for the Christmas shopping season for the Eurozone was bleak despite the huge discounts. It's the seventh straight month that the annual pace of sales have declined, and shows that consumers lack confidence amid the Eurozone recession and are unwilling to spend. The euro-dollar pair declined today. The pair slid about 240 pips after testing its high near 1.3070. In the New York session, the euro found support at its intraday low from yesterday, though its counter-rally was short-lived. The euro was pressured by its weak retail sales data and weakness in currencies from Eastern Europe and Russia that are facing stiff devaluations. Looking at U.S. fundamental news, the ADP employment change, a private measure of employment, showed the economy shedding 522,000 jobs in January. The services sector shed 279,000 jobs, and the goods-producing sector declined by 243,000. The overall figure came in close to expectations. Non-manufacturing activity contracted at a slower pace in the U.S. in January, as the ISM measure rose to 42.9 from 40.1 in December. That came in above expectations, though anything below 50 separates contraction from expansion. Still, the subgauges for business activity, new orders, and prices all rose compared to last month, though employment weakened. The dollar-yen pair fell overnight, but recovered in New York trading until it ran up against the recently established line of resistance at 89.80. U.S. stocks were up in the morning, but then faltered, with the Dow Jones index falling into the red. That stalled the greenback's advance and kept the pair in its pre-established range today. The U.S. dollar-Canadian dollar rose overnight, setting an intraday high near 1.2435 before sliding about 180 pips in early New York trading. It set a new intraday low below 1.2250 and then saw a counter-rally as a risk aversion increased as a result of weaker U.S. stocks. The price action in the pair the last four sessions could be shaping up to be a head and shoulders pattern. Today, New Zealand posted its unemployment data for the fourth quarter, though it was too late for us to report on in this broadcast. Overnight, Germany will release data on factory orders, and the UK Halifax Bank of Scotland is expected to release data on housing prices. Tomorrow early in the morning, as we mentioned earlier, the Bank of England and the European Central Bank decide on interest rates, with the Bank of England expected to cut rates another 50 basis points. Tomorrow, the U.S. has three releases: weekly jobless claims, labor productivity and costs, and factory orders. Canada, meanwhile, posts reports on building permits and its IV PMI. And that wraps up our broadcast for today. Thank you for joining us here at CMSFX.com, and happy trading.